Hello, good afternoon, ladies and gentlemen. We are here tonight to talk about the dark side of trading. So we are pretty used to have, let's say, quite a romantic view of trading based on technical analysis and formula mathematicas and whatever. So we are based upon the fact that we can predict the future. But trading has also a dark side. And the dark side of trading is based upon ourselves. So the technical analysis is something objective, and the dark side is subjective. So it depends from us. And there are two demons that we are fighting constantly with our trading. The first is fear, and the second is greed. Today we are going to talk about the fear, because fear is probably the most significant emotion for traders, is the strongest, because we are struggling with our emotion, and fear can demobilize what we have learned, hardly learned in technical analysis. So maybe that we are excellent in technical analysis, and the statistical say that we have a success of 67%, 70% or whatever, but we are paralyzed. We are unable to enter the trade because we are acting on a fear-based ways. But it's pretty normal because we are humans. So fear is causing pain. And the fear is a kind of self-defense mechanism in order to have no pain. So to have fear in trading, as in life, is not a sign of weakness, but it's a self-protection, and we have to think about that, because fear is working against our interest, and so we have to become able to deal with fear. Fear, it's pretty important in trading, because when we are under the control of this demon, the fear demon, we cut winners short because we have fear that the profits will go down. We don't enter into the trading because we have fear of a potential loss. And we have a lot of emotional behavior that are moving our trading results and performance. Or, for example, we enter into a trade without any technical analysis because we are fear of leaving money off the table. So we have solid technical skills. So why it's so difficult? Because fear, it's pretty important. It's one of the most stronger strengths in our brain, okay? What's happened? When we are facing a significant loss, significant maybe all for the amount, or because from a symbolical point of view, it's the first trading with real money, for example, and we lose $10, $20. So now fear is coming. The fear is coming in the way of trading, and a lot of people stop trading and never return. So we have to understand that the techniques that we have learned in technical analysis are not able to help us in overcoming fear. We have two sides, the bright side and the dark side. So we have to be able to manage both the technical side and the emotional side of trading. It's pretty important to remember in one of the books that you have in your e-learning, Trading in the Zone from Mark Douglas. Most investors believe they know what is going to happen next. So this is one of the most important points. We are so good in technical analysis that we believe to foresee the future. The point is that we are putting too much weight in the outcome of the current trade. But we have to remember, you remember the monkey, okay? We have to remember that trading is a probability game. It's not a matter to be perfect in entrance and perfect in exiting and to have a 100% of results. And the problem is that when we react emotionally, we have these two demons, the fear and the greed, that are managing, handling, governing us after losses or after wins. And the most important is the trade, the transaction that we are doing. Most high will be the fear level. For example, if I am at the step 4, and if I'm doing well, the 4th step, I will pass my level. Of course, the fear level will increase. And if fear will increase, the trader will become more hesitant, more cautious, because he will try at any cost to avoid a mistake. And the problem is that we will have a pressure upon us, and the risk of collapse will increase as well. So all traders have fear. So it's this is not something that something that related only to the new buys or whatever. The difference is that the losing traders are controlled by fears. The winning traders are able to manage their fear through techniques that we will see now. So you remember that in the ancient times with the prehistoric man, the Neanderthal man, there was one of the most important psychological reactions. When there is a danger, okay, we have two possibilities, fight or flight. And this is where fear is coming into our life. Because when we are facing a potential problem, fear sometimes tells us to fly away, and the trader will freeze. So there are 4 major trading fears. The first one, the strongest, is the fear of losing. Okay, you remember there was this sentence that's very common: no pain, no gain. So when we are entering into a transaction, we have a kind of psychological uncomfortable zone. If we have fear, we are choosing the no pain, because it's I don't want to face the potential loss. So I'm not choosing the gain, I'm choosing the no pain. So I'm becoming hesitant to execute. And I'm not able to pull the trigger. I'm not able to enter. I'm not able to exit. Okay? And you know, when we have a decision, we have seen also in our practice, sometimes we have to take a decision. The decision dictates a new entry or a new exit. So when the fear of loss is holding ourselves back from taking action, we lose confidence in our ability to execute our strategy. And so this causes a lack of trust in the strategy, or more important, a lack of trust in our own ability to execute. So we start to question the strategy. Maybe that the red line below the green, below the yellow, but yes, maybe that it has to be also below the 30 or below the 50 or whatever. So we are starting to overthinking because we don't trust the strategy. And the strategy actually is pretty simple, really very simple, because we have not to overthink about that. The fear is generating the doubt that we will be able to exit. And if we are not able to exit in the right moment, a self-preservation mechanism will start, and we choose not to get into a new trade. And this is called analysis paralysis. So we try to have new trades, but at the proper moment, we don't pull the trigger. So we have to remember that every trader has the potential to become a loss. This is the reason why we are using a strategy. We are using CPP. So we have to follow a strategy that unemotionally tell you when to enter and exit the market. This is the only way that we can avoid the pitfalls caused by fear. The second fear is the fear of missing out a profit. And this fear is the closest relative to the second demon, that is greed. So sometimes we see that there is a trend on the screen, okay? Or an uptrend or a downtrend, and we say, no, I don't want to lose this train because I'm fearing of missing out the profit. Or the system is telling us to go in the reversal of the trend. And so we fear of missing out. So what do? Is that we want to jump into the train, and we say to the terminal, get me in at any price. I want to participate in a hot trend. And we are not carrying out the proper technical analysis. And the technical analysis tells us that we have to enter in the proper moment, not later. Later, I will have another train that will start. So it's just to wait and be patient and don't be managed by greed. The third fear is the fear of letting a profit turn into a loss. So what's happened? It's happened that I'm positive of $5, for example, and I want to take the quick profit because I'm not accepting the losing. Because I want the winning feeling, the 100%. I'm so good that in statistics, I'm 100% winning, and doesn't matter if it's 100% of winning of $2 or $3. So we have to follow our trends. This is our style, trend trading. When the trend begins, we stay into the trend up to the end of the trend. The trend is your friend up to when it will bend. So in the Cerberus strategy, that it's a long position, it's a position trading, we will exit the position when the trend will end. Now in this stage of our trading, we will end the position before the end of the day. So the winning feeling emotion, again, is when we don't accept the losses. And we have to think about that. Can we have small losses? Yes. This is the right, clear answer. Yes, in trading, we have losses. Losses because we have a false signal to start with. Losses because the indicator is telling us something of correct, but in the meantime, the Central Bank of Australia is doing another transaction and the price will change, may happen. So when we are looking the history of the trading, we have to remember that we are talking as a probability game. And the real result of trading has to be in a long time with a huge profit in a consistent way. Okay? What is happening in the short term has to be accepted because we know that in the long term, we will stay in profit if we will stay in our strategy. So to lock quickly a profit and to take the $2-3 instead of leaving the trending run and generating more profits is something that is against our interest. We stay with the trend until the trend changes. Of course, we have to check, okay? Not easy, but very important. The last is the fear of not being right. That's what I call the perfectionist. So too many traders are pointing out the attention about the right analysis. Is a matter of ego, is a matter of proudness. I'm proud of myself. I'm proud because I'm good and I want the best technical analysis that will give me the best trading opportunity. But this is exactly the opposite of looking the trading as a probability game. So the desire of being right is stronger about the desire of making money. And this is the result of our demon that is called the individual ego. So we have to trade without ego at all costs. Ego leads, but results are negative. The ego needs to protect itself and to show off with a good statistic. You remember when we were analyzing together the statistics, there was one trader with a winning ratio of 25%. That is very low, but it had a very, very high profit. Okay, so we have to accept the lose, we have to accept the failure, because the losses are a part of the winning in any trading. So the perfectionist has the fear of not being right, because we cannot be perfectionists from one side and to be a great trader from another side. Perfectionists can be excellent to write a book about technical analysis, but not for trading, because we have to learn to take a loss. Take a loss is a part of our expenses, okay, in our virtual office. We have to be excellent, I agree, but we cannot be perfect. We can try to be excellent over a decent period without judging any single trading, any single transaction, any single signal, pretending that any single signal has to be perfect. So we have to remember that we are grading ourselves not about the winning ratio, but about the bottom line of the trading account. We have to judge ourselves about how we can execute our system in entry and exit. So again, know your strategy because you don't know the future. Trading is a probability game, and we have to move from a fearful mindset to a mental state of confidence. So we don't want to be perfect, but we want to be self-confident, okay? We believe in our abilities to execute every trading, regardless the current market situation, because we want to be profitable over the time. And the profitability over time is giving us the confidence. If we focus on the strategy and we're managing fear, we realize that giving up is the only way that you can truly lose. Your strategy has to be followed mechanically, without human emotion. So we have to repeat a mantra, okay? So that's, and this mantra is again, we are not able to foresee the future with or without indicator, because we don't know what is going to happen next. We don't know what is going with the central banks. So it's indicators is just an analysis of the past, but is not an indication of the future. It's an indication that it may increase the probability of success, but is not giving the perfection. And remember what we said in our last workshop, you have to trade like in a casino, but not as a casino gambler, but as a casino owner. And casino owners are accumulating a fortune with just an edge of 135% for roulette, okay? So it's they are working with not a 50-50, but 51.35% of probability, and they are accumulating a fortune. And you can do better than them, much better. Okay, we have seen in your technical analysis, no one was less than 65%. But remember, your trading is a probability game, and you have to be cleverer than a monkey. So again, I hope that this bite of psychology will help you in order to have a better trading, and I invite you to learn and practice the rules mechanically without emotions. Thank you for your time.